Hey everyone, welcome back to Corporate Decoder. Today we're diving into the world of TransCode Therapeutics, but be warned, this report might leave you feeling a bit anemic. We're talking about a company fighting cancer with RNA, but first they need to survive their own financial battle. TransCode's latest annual report paints a picture of a company with some promising science, but also some very real financial challenges. We're going to break down what that means for the future of this biotech player. First, let's get oriented. This is TransCode Therapeutics annual report, so it covers their performance up to the very end of last year, December. We'll be using it to try to understand where they're heading. TransCode is easy to find on the stock market. Just look for the symbol RNAZ. That's what you'll see if you were to trade them. Now, before we get too deep into the numbers, it's important to understand the kind of company we're dealing with. TransCode includes a section called Summary of Material Risks. This isn't just legal jargon. It's a list of the biggest threats to the company's existence. Things like our ability to continue as a going concern or our low cash position. These are big red flags, which basically means the company is worried about being able to stay afloat. To try and keep their stock price up, TransCode has done something called a reverse stock split. Is like taking a bunch of small bills and exchanging them for one big bill. It doesn't change the total amount of money, just the number of bills. TransCode did this in 2000 instances. Like NASDAQ. Alright, now for the numbers. Remember that the most interesting part is for you to make up your mind. TransCode hasn't generated any revenue from product sales, zero, zilch, nada. That's because they're still in the development phase, so all those expenses are going out and no money is coming in. Let's look at their expenses. Research and development, what they spend on trying to create new drugs, was about $9.7 million. That's almost $2.6 million less than the year before. Now, this seems good as it means that they are saving money somewhere, right? Well, it might also mean that they are slowing down the development of new drugs. General and administrative costs, which covers everything from salaries to office rent, came in at nearly $6 million. Again, a $1.2 million drop from the previous year, possibly meaning you're laying people off. Here is the balance sheet. The total assets were about $7.3 million, and the important bit and total stockholders' equity deficit comes in negative at around $2 million. This number is not good. Their net loss per share comes in at about $47. This is compared with last year where it was $3,041.19. This sounds good, but that is because of the reverse stock splits, meaning each share represents a bigger chunk of the company. We have been looking at some numbers, and at first glance you would think they improved, right? They decreased expenses while still working hard. But if you look at the real numbers at the end, it's not all that it looks like. The real problem is that their cash flow is still negative, and they depend on things such as offerings and not selling any products to keep afloat. They even mentioned this. Accession Management believes that its cash at December 31, 2024, together with the net proceeds of approximately $8 depend on things such as offerings and not selling any products to keep afloat. They even mentioned this. Accession Management believes that its cash at December 31, 2024, together with the net proceeds of approximately $8 million depend on things such as approximately $8.8 million as will be sufficient to fund operations into the fourth quarter 2025. Now, another important thing is if they can hold up being a public company. They need to make sure they can follow all the laws as they are a smaller company and are subject to scrutiny. We have a section where they state these rules and regulations applicable to public companies to make some of our activities more time-consuming and costly. TransCode depends heavily on certain patents they license from other companies, mainly from Massachusetts General Hospital. If they lose access to these patents, it could seriously hurt their ability to make and sell their products. We also see several other related things such as compositions and methods for tunable magnetic nanoparticles. TransCode is working with the University of Texas MD Anderson Cancer Center, but the terms of that deal changed recently. Instead of a broad collaboration, MD Anderson is now mainly involved in running TransCode's clinical trials. This reduced TransCode's financial obligations to MD Anderson, good for the cash, but also reducing the scope of their collaboration, which is not great. Of course, there are also risks. TransCode spends a lot of time talking about all the things that could go wrong. They aren't kidding around here. First of all, they highlight our business is highly dependent on the success of TTX-MC138. If this one drug doesn't pan out, the entire company could be in trouble. That's never good when you put all your eggs in one basket. TransCode also has some listing problems with NASDAQ, meaning their stock could get kicked off the exchange. This would make it much harder to trade and could tank the stock price even further. There is also this line where they say, we have identified conditions and events that raise substantial doubt about our ability to continue operations, meaning there's a real risk they might not have enough money to keep the lights on. They also note that a lot of things are out of their hand. For example, their dependence on third-party manufacturers and organizations. What if something goes wrong with them? What about difficulties enrolling patients in our clinical trials? Finally, we get to this, our ability to generate revenue and become profitable. Seems obvious enough, but as they said, this is a big issue. So what's the bottom line here? TransCode Therapeutics is a high-risk, high-reward play. Their science is intriguing and they are working hard, but those financial realities can't be ignored. They desperately need more cash and their future hinges on a successful drug and partnership. Right now, this looks like a company skating on thin ice. Their ability to secure additional funding will be what determines if this company ends up going places. Thanks for watching. Do you agree with this assessment? Let me know what you think in the comments below. Don't forget to like and subscribe for more insightful breakdowns.